What happens when public companies start raising money not just to build artificial intelligence, but also to create the infrastructure for a token-based economy? Today, we are looking at two listed companies taking this direction from opposite sides of the world. The first is Datavault AI in the United States. The second is Unisound AI technology in Hong Kong. Both companies are using the language of artificial intelligence, digital assets, and tokenization, but their fundraising structures and strategies are not exactly the same. So in this video, we are going to compare what each company announced, where the money is supposed to go, and what investors should watch before assuming this is the next major technology opportunity. Let's begin with Datavault AI, which trades on Nasdaq under the ticker symbol DVLT. In May 2026, Datavault AI announced the pricing of a registered direct offering expected to generate approximately $60 million before expenses. The company said the proceeds would support the deployment of its GPU edge network, equipment, working capital, and general corporate purposes. In simple terms, Datavault AI is trying to build computing infrastructure that can support artificial intelligence and high-performance computing. But the company's story goes beyond servers and GPUs. Datavault AI describes itself as a provider of data monetization, digital engagement, and real-world asset tokenization technologies. The company has also discussed tokenization exchanges and digital asset infrastructure. That is where the story becomes more interesting. Datavault is not presenting AI and tokenization as two completely separate businesses. Instead, it is describing a combined model. AI infrastructure processes and analyzes data. Data can potentially be monetized. Real-world assets can potentially be represented digitally. Tokenization platforms can provide a way to exchange or manage those digital rights. The company has also announced a potential structured financing transaction of up to $2 billion. However, this is important, that transaction was described as a non-binding term sheet, not the same as cash already received. The proposal would be subject to further agreements, due diligence, approvals, and other conditions. So viewers should separate three different numbers. First, the approximately $60 million from the registered direct offering. Second, other funding arrangements the company has discussed. Third, the potential $2 billion structured financing transaction, which was not guaranteed to close. This distinction is extremely important when analyzing fast-moving AI and tokenization companies. Now let's move to Hong Kong. Unisound AI Technology, listed under the ticker 9678.HK, announced a placement of approximately 1.7 million new shares at 228 Hong Kong dollars per share. The company expected to raise net proceeds of approximately 381 million Hong Kong dollars, or about $48.6 million. Unisound said approximately 45% of the proceeds would be used to train its next-generation U-series agent-native multimodal foundation model. The company is targeting a near trillion-parameter general AI model. But the part that connects most directly to today's topic is the use of approximately 40% of the proceeds. Unisound said this portion would support a global large model token factory and expansion of overseas token-related businesses. The announcement referred to low-latency token distribution networks across Asia, Europe, North America, and the Middle East. This gives Unisound a slightly different profile from Datavault AI. Datavault's story focuses heavily on GPU infrastructure, data monetization, real-world assets, and tokenization exchanges. Unisound's fundraising is more directly connected to building an AI model while also developing a global token distribution network. But there is one issue viewers must understand. The word token can mean different things. In artificial intelligence, a token can refer to a unit of text or data processed by a model. In the digital asset industry, a token may represent access, ownership, a financial claim, or another digital right. Therefore, viewers should not automatically assume that every reference to tokens means cryptocurrency or blockchain-based asset ownership. The company's official filings and technical documentation should be checked carefully to determine exactly what its token factory will do. So what do Datavault AI and Unisound have in common? Both companies are using public market capital to pursue AI-related expansion. Both are connecting AI infrastructure or AI models with a broader digital asset or tokenization strategy. And both are attempting to position themselves in a market where investors are looking for the next layer of the AI economy. The common thesis is this: AI will require enormous computing power, data, and software infrastructure. Tokenization could potentially create new ways to represent, distribute, finance, or monetize digital and real-world assets. If those two systems converge, companies may try to earn revenue from more than just selling software. They may also provide computing, data services, digital exchanges, token distribution, or infrastructure for other businesses. However, similar themes do not mean identical businesses. Datavault AI is emphasizing GPU infrastructure and tokenized asset platforms. Unisound is emphasizing foundation models, AI agents, and a token factory. The companies may ultimately target different customers and revenue streams. That is why investors should not compare only the fundraising amounts. They should compare what product is being built, who is expected to pay for it, how much revenue already exists, what assets will the new capital purchase, how much shareholder dilution may occur, and how clearly the company defines tokenization. There is another issue that applies to both companies, dilution. When a listed company sells new shares, it raises money but increases the total number of shares outstanding. Existing shareholders may then own a smaller percentage of the company. Dilution is not automatically negative. If the money creates a profitable new business, the value created could outweigh the reduction in ownership percentage. But if the company repeatedly raises money without generating meaningful revenue, shareholders may face increasing dilution. For Datavault AI, the announced offering involved the sale of more than 109 million common shares and was expected to generate approximately $60 million before expenses. For Unisound, the new shares from the placement were expected to represent approximately 2.28% of its enlarged issued share capital. These figures are not directly comparable because the companies have different share structures, valuations, and businesses. But they show why the fundraising terms matter just as much as the headline amount. The bullish case is that both companies are entering a market that could grow substantially. Datavault AI could benefit if demand grows for distributed GPU infrastructure, data monetization, and tokenized real-world assets. Unisound could benefit if its foundation models, AI agents, and token factory attract commercial users across multiple regions. In the best-case scenario, these companies use the new capital to build infrastructure, attract customers, generate recurring revenue, and reduce their dependence on future fundraising. That is the positive scenario. But investors must remember that the announcement of a strategy is not proof that the strategy will work. The risks are also significant. AI infrastructure requires large amounts of capital, electricity, hardware, and technical expertise. Tokenization projects may face legal, regulatory, custody, liquidity, and investor protection challenges. There is also the risk that the word AI or tokenization attracts investor attention faster than the underlying business can develop. For Datavault AI, the potential $2 billion structured financing should not be treated as completed funding because it was described as a non-binding term sheet subject to additional conditions. For Unisound, investors should study exactly what its token factory is designed to provide and whether the company has identified specific customers and revenue sources. The key issue is execution. Can the companies convert capital into products? Can the products attract customers? And can those customers generate enough revenue to justify the valuation? Datavault AI in the United States and Unisound AI technology in Hong Kong show how public companies are trying to combine three major themes: artificial intelligence, digital infrastructure, and tokenization. Datavault is emphasizing GPU networks, data monetization, and tokenized asset infrastructure. Unisound is combining a next-generation AI model with a global token factory and token-related expansion. The opportunity is potentially large, but so are the risks. The most important lesson is this: do not judge these companies only by the amount of money they announce. Ask what the money will buy, what the token actually represents, who the customers are, and whether the company can generate sustainable revenue. If you want more side-by-side breakdowns of US, Hong Kong, and international companies entering the AI and tokenization economy, subscribe to the channel. This video is for education and news commentary only.